All right, good morning, ladies and gentlemen. Today it is January 2nd, 2020, and we are going to break down the dollar for the first and second quarter of the year. So today's analysis on the dollar will pretty much map out the directional bias for the dollar, in my opinion, for the majority of the beginning of 2020. So let's go ahead and start. As you see here, I have the monthly time frame broken down or brought up here on the screen. Go ahead and zoom out so I'll show you a little bit what I'm talking about here. Here's the monthly time frame. So we'll zoom in now. I see about the past 20 years. You see here from left to right the past 20 years. And we're going to go ahead and start with that. If I start here on the left, mind you, if I'm looking for a swing high, I'm going to use the last bullish candle's close. So here we have a close at 125.90. We'll drag that across. Of course, we're going to edit 590. Copy paste, and we're going to label this a monthly swing high. We're going to have to go into the colors, show our object descriptions, and there we have it. All right, now to the low side, if we follow this down, the next swing low is here. So we're going to use this candle, which is at 81 flat. I'm going to go in here, edit parameters, copy, and here, paste. Here, we're going to label monthly swing low. All right, monthly swing low. Now here, we bounce up, come up here, 91,510. We're gonna edit that, 91,510. Copy, paste. Here, we're gonna label this a monthly swing lower high. Okay, right here, monthly swing lower high. All right, now we're gonna follow this here. And we have 72,250. Copy, paste, monthly swing lower low. Got it. Okay. Now, what we see here from the monthly swing lower low, we see we bounced up, and we can now pretty much claim this area as a zone. Okay. We'll leave it green. So that's going to be a bullish zone, support zone. Was resistance here, broken through, became support right here. Okay. Right here. Resistance. Broken through to support right here. All right. So now from here, our next potential swing high is here. So now this trend here has been broken. You can't really see that. Let me make that look bigger. This trend here has been broken. Okay, so now we are headed in this direction. Here. Okay, so now let's use this low. We're going to start from this low because the trend has changed. Okay, the trend on the dollar has changed here in 2010, and we began to come up. Mind you, for the past 4 years, since Trump has been in office, the dollar has not done shit. But now that Trump is leaving office, the dollar is actually getting ready to move. This here is Obama's term, here and here. Okay, starting here in 2007-ish. Well, no, it's actually, what was Obama? 2000, shit. I actually can't remember, but it was within the past 10 years, and as you see in that 10-year time frame, we began to go bullish on the dollar. I'm not really into politics. I just focus on the charts. But during Obama's term, we did see an increase in the dollar. Here in Trump's term, past 4 years, we know that because his term's up. So the past 4 years, we see we've been in consolidation on the dollar. Obama's term, Trump's term. Okay. And I'm just using this off eyeball, so you can go and check the exact dates, but it is within this time frame that we saw Obama in office and an increase in the dollar. This time frame here, we saw Trump in office and not necessarily a decrease or an increase, but very stagnant volatility on the dollar. So now let's continue to begin. I'm going to remove this Trump zone is what I would call that. We're going to remove that Trump zone. And now we're going to label this swing high here. And we're going to use candle closing at 102,330. Copy. All right, we're going to label that a monthly swing high. All right, monthly swing high. Now, we have these labeled areas labeled. Now let's come in here to the weekly, and this is what we're going to be faced with on the weekly time frame. Based on all the lines and support zones that we drew, we're here. Now, if we come in here and look at strictly just the weekly, actually, let's come back in here to the monthly, and let's look at this area here. I want to highlight this, look at this area over here to the left, because as you see here, we follow this all the way to the left here. Look at where we end up. So let's key in on this zone because it's previous data. Let's use the previous data to get an idea what current data is going to do. So we come in here, this swing low here, this candle was at 98.20. I'm not necessarily going to label that anything. I just want to highlight that line shot horizontally across the board. Now I want to go down to the weekly. Okay. Notice how that line I just drew is right here. Okay. Now I want to start to analyze the weekly time frame. Here I can kind of see. I'm gonna start with this monthly swing high to this monthly swing low. We're gonna go down and highlight this here, retrace swing high at 94,730. And I'm going to change the color since we have changed time to weekly retrace swing high. Since we have changed the time frame, I have changed the color of my support and resistance lines. So now we have a support here, broken. So now we have a clear support, and we do have a slight upward trend showing here. So I'm not going to label that because I don't like to label support trend lines too much unless it's a very clear indication like this. So here on the weekly, we're not going to draw one just yet. So now we've done the weekly support and resistance, but we can see that we had some movement like that here. Okay, you can see that. So we want to see that clearer. Since we can't see it there, all we have to do is come down in time frame. And now we're on, as you see, we are on the daily. Let me take a look over here at that. Okay, good deal. We're deep in profit on the pound on the USD CHF. But let's go back in here. You know, it's exciting to be in profit for those who have taken the trades I placed and called this morning. We're deep in profit. But let's continue. All right. So here on the daily, let's go ahead and analyze these swing highs and lows here. If we look at the most recent trend, we can kind of see we had a high highs, high lows, high highs, high lows, high lows. And we reversed the trend here, and we started a new trend, reversed the trend here. So let's use this previous bullish trend here. Okay, we started here. Let's highlight this area, 95,373. Since we have changed the time frame, we will change our colors of our lines. This is a daily swing low. So, daily swing low here. We got another swing low. We use that 96.228. 96.228. Copy. All right, this is going to be a daily swing higher low. All right. So now that we have labeled those 2 points, we can clearly see that those are nice support zones there. Okay, you can clearly see that. All right, look at that trend. That's the type of trend line I like to see there. One that's easily identified. Okay, we can also put one here. All right, but we're not going to. All right, now let's focus on this daily over here. Now that we've pretty much highlighted this support zone, we know we're in a bullish, we're looking for a bullish movement here. Let's go highlight the 4-hour chart, and voila. Here we have 4-hour chart showing an extremely bullish movement up out of the support zone we have identified here on the weekly and the daily time frame. 4-hour chart, extremely bullish candle, and we should be off to the races for the year. In my opinion, for the next I would say for the next 6 to 8 months, we will see an extremely bullish movement here on the dollar, which is indicating an extremely high increase in interest rate, and the dollar is going to be in trouble very soon. You do not want to have all of your assets in the dollar. You want to have your assets spread out because the dollar and its interest rates are gonna ready to skyrocket. So if you don't have any money, it's going to be hard to get any money. Unless, of course, you're generating it out of the currency market like we are. So as I break down and come in here to the 4-hour chart, I'm clearly seeing an indication of being very bullish out of that support zone. Now, if I come into the hour chart, I can see that as well. The hour chart is where we take our trades. So here comes the Fibonacci. Fibonacci, last swing I can see here on this hour chart would have been from here to here. So as we trade the dollar, if we do not trade the dollar, we would be looking for this continuous movement here. Mind you, the hour chart is our entry time frame. So once we've done our analysis, all we have to do is bump down to the hour chart, find the most recent swing in our favor as our long-term bias, and enter with appropriate risk. Thank you, ladies and gentlemen. That is my prediction on the dollar. So, in summary, by summer of 2020, we shall see the dollar in the ballpark range of 97.9 or higher.